every day you have to wake up, you have to make sense of this complicated world. I prefer to be called Dr. Realist. I'm not either a pessimist or an optimist. During 2006-07, I predicted the global financial meltdown that occurred in 08-09, and because of that, I got that nickname. I think that during the global financial crisis, those who were too optimistic held on into risky assets like US and global equity for too long, while if you had followed my advice that I had to be underweight in US and global equity, would have avoided that 50 or 60% correction that occurred between October of 2007 and March 2009, where you really had almost a two-third drop in global equities. But it's not as if I'm a perma bear. Right now there is a global economic recovery, so I think you have to be realist about what can go right and what can go wrong. You don't want to listen only to people that agree with you. It's more important to listen to people who disagree with you and see why they disagree with you. So I make a special effort to listen to those who think that things are going to be much better than I think, because that pushes me to think harder about whether my views are correct. First of all, you have to be diversified. You have to put some of your money in the US, some of it abroad, Europe, emerging markets. I would say that gradually long-term interest rates are going to rise, so you might want to be underweight in bonds. I think that a global recovery is going to occur, so you might want to be marginally overweight in equities. You probably want to be underweight today in emerging market equities. More positive signals are coming right now from Japan, from the United Kingdom. So maybe a marginal overweight in global equities, if there is going to be a slightly more robust global economic recovery, would be the correct choice.